Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol USO. Today we are up 3.7% and the market is currently closed on the 1-hour chart. We are on positive MACD, and on the 4-hour chart we are approaching positive MACD after several days of negative MACD, and we seem to have breached a resistance on the 50 moving average, which is a positive sign that this downtrend is temporarily over. And on the daily chart, we are also closing above the 9-day moving average. As you can see, the green candlestick closes above the blue 9-day moving average. Again, another sign that this downtrend is temporarily over. What we need to see is, in order for this downtrend to completely be in reverse, we need to see a break above the 18-day moving average, and this moving average also coincides with past support or past resistance, since we are below support levels, and that is our next resistance level, and that price also coincides with the prices back between August and all the way to September, mid-September. So that is at the price of $16 and $16.85. So we have those price movements or price levels to look at. And as for support, we bounced off of support that was made in August 7th, and it respected that support level. Again, we need to see a firm or third test of it again to see if it's actually a bottom in this downtrend. So again, I'll mark that as our next support. So if we were to move down lower, that price movement is roughly around 8.2% to the downside. However, if we reverse and head on higher, that price movement is roughly 6.8% to the upside. So let's head to the forecast model. On here, I'll go day by day, where WTI crude oil will head to next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. We have the current trend right here, and below is the trend that I believe is the best match. So let's compare why these two charts are similar. So what we have here in the beginning, we averaged below the middle Bollinger Band for several days, and then we proceeded to make a reversal to touch the upper Bollinger Band, and next we lost steam and proceeded to touch the bottom Bollinger Band next, right towards the end. And we also see an attempt to revert back to the mean, or revert back to the middle Bollinger Band right towards the end. So we have that price action there, and on here we start to see similar patterns as well. We averaged below the middle Bollinger Band for several days, and then we made a complete reversal to touch the upper Bollinger Band right there. And next, after touching the upper Bollinger Band, it made another reversal to touch the bottom Bollinger Band. And after that, we see it revert to the mean as well, hitting or making a good attempt on touching the middle Bollinger Band right towards the end. So we have about 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there is reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. And the model that we just examined was October 14, 2013 to January 9th, 2014. Back then, or this trend model is available in the link below. It should be available in the next coming days, so sign up in the link below. And the trend is up 2.6 or 2.7% in the next coming days back in 2013 to 2014. So expect WTI crude oil to head on higher, And that is it. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.